Hi guys, it's Bullish Kibla Academy here again. So in this video, I'll be walking you through the trades I took this past week, and I'll be also be explaining the reason why I took this trade. And on my watch list here, I have its currency pair, Euro JPY, Euro USD, USD CHF, GBP AUD, NZD USD, XA USD, and USD JPY. So the reason why I have all these currency pair on my watch list is so that if I come on the chart and I discover that I'm not seeing any setup on Euro JPY, then I want to go to Euro USD to see if there's any setup there. If I don't see any on that, I want to check on USD CHF. If I don't see on that too, I want to check on GBP AUD. And then if I don't see on that one too, I want to go to NZD USD and SA USD or USD JPY. So I don't want to restrict myself to just one currency pair. Now, and before now, that was what I was actually doing. I restricted myself to trading just Euro JPY. So there was a time I was trading Euro JPY back to back, and there were times I'll come on charts and then they won't be set up for me. And I needed to trade. I need to trade. And since there's no setup, I'll start trying to look for a setup by myself. And most times it doesn't end well. So that was why I had to add other currency pair. And the whole of last month, I think I was trading Euro USD and USD CHF or so. So the summary of my discussion is that I have all these currency pair on my watch list so that number one, so that I'm not restricted to just one currency pair. Yes. I don't want to miss a day without trading. And also, so that in case I don't see any setup on a particular currency pair, I can easily move to the next currency pair and look for a setup. So I can't have 7 currency pair on my watch list and I won't be able to get like 2 or 3 setup out of the 3. And it's not possible. Alright, so for this past week, I traded Euro USD only, and I traded back to back. I traded from Monday through Friday. I traded on the 8th, on the 9th, on the 10th, on the 11th, and on the 12th. So I'll be walking you through my trade this week. Although I took more losses this week anyway. Notwithstanding, the losses are part of the game. And as a forex trader, you don't only show your profits alone, you also show your losses too. So let the people know that they are not immune to making losses. That losses is part of the game. And the most important thing is, you can take a loss too, but you must make sure that you apply your risk management to it. You apply risk management so that you are cutting your losses short and you are allowing your profits to grow. So without wasting much ado, I would like us to go into it. So this is Euro USD. I love this currency pair so much. So most times I trade either Euro USD or I also trade GBP AUD, and then sometimes I trade Euro JPY and also USD CHF. So I've not traded gold in a while anyway. So alright, so this is an Euro USD and this is on the 4-hour time frame. This is on the 4-hour time frame. You can see we have a demand level here. We have a demand level here. And we also have our resistance level or supply. So we have our demand level. So we have, this is our demand level here. We have our demand level below here. This is our demand level, or some people call it demand or support. This is our demand level here. Above we have our support. Above we have our resistance or supply. Resistance or supply level. So this is on a 4-hour time frame. So what I do is I make use of the this analysis that I start analyzing from the higher time frame, and then I come down to the lower time frame for entries. So I come to the chart. This is on a 4-hour time frame. I either use daily time frame or a 4-hour time frame. So for the 4-hour time frame, now the reason why I'm starting with the 4-hour time frame is for me to have an holistic view of where the charts or the price is currently going. And for instance, if you look at this chart now from August, we have a supply below, demand rather, and we have a resistance above. Then we'll see that price has been retested. Price started from this level, came to this level here, this resistance level. Couldn't break out of it. You can see, came down to retest this level and came up here to this resistance, broke out a little. Now we broke out of this level, then came back to retest this level, to the demand level. We couldn't break out of it. Then the price went up back. That to retest this level again. Then came down. Didn't get here anyways. Came down there. Started coming up. Then he broke out of this level. We had a broke out. Then break and retest. Came back to retest. Then we had another breakout. Then we have a pullback here. And you can see where price is currently. So this is what you can see that price has tested this level once, twice, the third time. You can see this is like the 4th time, and this is now the 5th time it's testing this level. And for the demand, this is the 1st time, the 2nd time, the 3rd time. You can see. So this is to let you know that this level is a key level. This level 2 is also a key level, and that is why we usually mark this level out. Can you see? We usually mark it out. The reason is we're expecting that once price comes back in the future to come test it, it's going to be a good level for us to make decision. And that is what has been happening. You can see the 1st time we tested it, we had a pullback. The 2nd time too, came down. The 3rd time, and for the demand too, whenever the price tested the level, it will push up. So it's going to give us an opportunity for us to look for a good entry to buy. As simple as that. So this is on the 4-hour time frame. This is on the 4-hour time frame. Alright, so we can see that we've been having the demand zone and the supply zone, and price has been touching these levels or these zones, and it has also been retesting it. So currently now we can see that so as at early this week or last week, price broke out of this level. Can you see? So when price broke out of this level, now you can see, if you look at other levels here, price broke out a bit. This one, the price didn't break out. This one, you can see that price broke out here. Then this one to price broke out. These are like first breakout, and they came back. You can see price broke out here, and it came back inside the zone. Can you see? But later on, it broke out like a V breakout. Can you see? So when price break out here, I was anticipating that okay, there's now a breakout of this ranging market, and price is now going to the upside. So you can see price broke out, and we had a retest. Can you see? We had a deep pullback, imagine, and this is where price is at currently. So price is even closing outside of this zone. Can you see? Let me zoom in so that you can see it. So this is where the market is currently, and you can see that the candlestick has closed here. The candlestick is closing bullish rather, but it's not that strong. Can you see? But it's actually closing outside of the zone. Can you see? So the candlestick closed outside of the zone. So my intention, or what my bias for the market for this week was, okay, we're probably going to be having a bullish market. So what I was expecting the market to do, or price to do, was, since there was a breakout here already, can you see? So I was expecting a retest of this level or this zone, then I'll look for buying opportunities to continue the buy. But that wasn't what we have here. You can see, and see what we had here. We had the price broke out, then a deep, can you see, a deep retracement, then you're having a push up. Now it has broken out of this zone. Can you see? Then we had another retracement again, and it has broken out, and it's even closing outside of this zone. So this is where the market closed this week. Alright, so I'll be going back to, or I'll be going down to the lower time frame. Like I said earlier on, I make use of the top-down analysis. And top-down analysis just simply means that you're starting your analysis on a higher time frame, then you begin to lower it down to the lower time frame. So you're starting your analysis on the higher time frame, maybe on the weekly. It can be weekly, it can be daily, because there are some traders that start with weekly. There are some swing traders that they just go to weekly, then they go to daily, then they go to 4 hours, and they take their entry on 1 hour. This is for weekly. You can see this is for daily. I see, very smooth. Then you have the 4 hours, 1 hour, like so. I would like to go down to, this is the 1 hour. Can you see? This is the 1 hour. I track my trade, and the reason why I track my trade is for number one, so that I can be able to go through it, so that I can be able to go through my trade. I will look at what I've done for the week. Understand? Like, we all know that whatever is not measured cannot be improved upon. So it is good that you track your trade, like you have like a trading journal. where you track your trades, every win and every losses. You also track the wins, the win to reward, the risks to reward ratio, and your win rate too, and your losing rate at the end of the month. Now this is USD. So this is on for 1 hour time frame. So like I said, I was expecting that we're going to be having an uptrend from here, but the market broke out. Can you see? You see, it came to retest this. So this is like a breakout, then came down, came back into the zone, then retested the zone. Then we had, you can see, we had a downward trend here, and we had an uptrend that broke this last high. Can you see? We had a pullback a bit. Can you see? Then this is where the market is currently. So this is where the market is currently, and it's very it's advisable that as a forex trader, even when you have your own bias, you still allow the market to lead you. So don't always be too forward when it comes to forex trading. Even when you have your own bias, like I said, it's fine, but still wait, allow the market to play out. Allow the market to play out, then you follow the market. There are times you expect that the price will be bullish, and before you know it, it's bearish. Follow it. There are times that you expect that the price is going to be bearish and it's giving you bullish signs, then just follow the bullish signs and take your trade. Alright, so this is the 1 hour. So let me go to 15 minutes. So once I'm done with the 4 hours, I go straight to the 15 minutes so that I can take my trade on the 15 minutes time frame. So I trade full time, and I trade every day. I trade every day. Alright, so this is the 15 minutes time frame, as you can see. So this was where the market ended for my previous video. If you have not seen my previous video, I would like you to go and check my previous video, because I did analysis of the trade I took too, and it's really going to be of help to you, because I explained carefully why I took this trade. Alright, so for this new week, we had from September 8th. So now from the last week, this was where the market closed. Markets closed there. So markets closed there, and when the market closed here, you can see what we had here on the 15 minutes. There was a news event, a CPI. You can see we had a push, a pullback, push. Can you see? Pullback. Then we had this new high, but this new high couldn't break this last high. Can you see? Then we had a pullback. Now this pullback now, can you see, it has broken this last low, and immediately I spotted this, I was expecting the price to give us a retracement. Then I'll look for an opportunity to sell. See, that was what I was looking at. That was what I was looking at here. But we could see that when the price got here, then the price ranged a bit, and this was where the market closed. The market closed around this area. The market closed around this area. And when the market opened on Monday, Sunday night of Monday, so the market ranged a bit. Then the pullback I was expecting around this place, that was where we now had it here. So we had a pullback, can you see, to this level. So we had a pullback here. So when we had this pullback, I was already anticipating a sell, and that was why I took a sell here. Can you see? Then I didn't just take the sell, I waited patiently for like a confirmation, because most times I use liquidity, and then I use liquidity candlestick pattern for my entry too, but mostly liquidity. So when I saw the pullback here, yes, after this I saw the pullback. So I saw that this low, number one, this low was taken out. Can you see? So number one, we had this first low that was taken out. Then number two, we had this second low that was taken out. So these two lows that were taken out give me more confirmation that okay, that we are going to have a retracement. Then I'll look for an opportunity to sell. Now, when the market opened, so it ranged, then it went to the upside. And immediately I saw a candle, this candle, I was like, okay, this is time for us to go short. Then I entered my sell. But the market gave us a little profit. It's not even up to a 1-to-1 ratio then before it started going up, and it took me out. So I usually risk 20 pips for my stop loss. Then I risk 20 pips, and I anticipate 40 or 60 pips. That is 1:2 or 1:3. So my risk to reward is 1:3, but sometimes I take 1:2 depending on how the market is. So I also check out what is happening on the market. I check. So I took a loss here. That was on Monday, on the 8th of September. So I took a loss here. Then and see, we had a push. So, and that is to tell me that the market is going in an uptrend. You can see a push, a pullback, a push. Can you see the pullback? Then on Tuesday, you can see the market, we had a push. So as at on Tuesday, this was on Tuesday. So this was where the market opened. You can see we had a push, a pullback, uptrend, downtrend. Now you can see that this downtrend now, this low has taken out this last low. Can you see? This low, that low took out this last low. Then we had a new high. Can you see? We had a new high that took out the last high. So when we had a new high, this new high now that took out this last high, I was still anticipating that okay, we are still in the uptrend. So I was just waiting for price to come back and sweep this liquidity. You can see, and sweep this liquidity then, so that I can tap in for a buy. And that was what happened there. You can see price came back. This is the new high. Then price came back and swept. You can see, took out this low, took out this low, took out this low. And see that price took out. Is I need us to listen attentively. Price took out this low. It also took out this low. Can you see? And it also took out this low. So this is where the price we are paid for. So see, price took out all this low, and when price took out this low, and it gave us this candle here. I see this candle here looking like an hammer. So when it gave us, it was like a rejection candle, and it was already going to the upside. And that was why I took my buy here. And you can see, took my buy, but price came back, came back and it took me out. Then it gave us another high that couldn't take out this last high. Then it started going to the downside. And you see, started going to the downside. So we had a bearish trend for that day. So I took another loss here. I took another loss on Tuesday. Then fast forward to on Wednesday. So we had a pullback, we had a downtrend for that day. So fast forward to on Wednesday. So I was still expecting the continuation of the downtrend. Like I said, it is good that you follow the trend of the market. So it's good that you follow the trend is your friend, irrespective of what you are thinking. So I said, okay, we are now having a bearish trend since price has now taken out all this low. So I was following the trend of the market. You can see when the market opened, we had a pullback, then we push up, took out this last high. Can you see? Then the market gave me some confirmations here that made me to a sell. So you can see I took it sell here at this zone here. So when the sell got here, it has given me like almost 1:2.5 1:2.5. Then started ranging, then came up and took me out. Okay, I can't even remember if I took partials here or if I was closed. I can't remember, but it actually took me out. Came back to take me out, then came down. So it was not really clear here because you can see what we have here for Wednesday. You can see over, took out this low, and came up almost the same level here. Couldn't take the high, came back. Then this is a new high that took out this last high. You can see then we had a pullback again. So almost like a ranging market for this day. So this was the trade that happened on Wednesday. So I took another loss on Wednesday. Then for Thursday, we had a news event on Thursday. So when the market opened on Thursday, the market was just ranging. You can see. So the market was actually ranging. So I was anticipating that we are still going to continue to have a downtrend. You can see the market was just ranging and ranging. So I entered myself from this level here. I was waiting for it. Came down here. And the price came down here. I expected a pullback, then I took a sell here. So you can see it ranged, the range came down, went up. Then as at this point, excuse me. So the market came down here, came to this level. It's almost 3.5 for me. And it's a 3.5. So when it closed there and it was going up already, I closed my trade around this level because this was what's it called now? This was when the news happened. It was so fast. It came down, then it started going up. Can you see? So the news pushed the market up, but it came down first. So immediately it got to this level, I was able to close my trade. Then it went up almost 80 pips, or okay, almost 90 pips. So I didn't take this buy. I was in a sell already, so when I was done, I just closed. So I got, I think, 182.5 or so. So that was what happened for Thursday. Then for the last day before the market closed, which was yesterday, so you can see the market opened here, and at first we had an uptrend. We had this, then a push up that took out this last high, then a pullback that has broken this low. And you see, so immediately this low got broken, I was expecting a pullback here, then I can position myself for a sell. I was expecting a pullback here so that I can position myself for a sell. Now at first I took a buy here, but I closed at break even. I took a buy at first before, so I just took it. Because there was no really intent there, I just said okay, I reduced my risk, I just took it. Then but later when I said okay, it's giving us a bearish trend, I entered a sell here, you see. So, and the reason was because we had high and low, can you see? Then we're having a new high. This new high now took out this last high, can you see? It took out this last high here. Then this low, if we have had something like this, maybe after this high we had a low that didn't take out this low, we had a low like this, and it's coming to take out this high, then I would have looked for a buy from here. But this was not the case. Instead, after this high, because this low, if it were to be an uptrend, this low is meant to be protected. This low here, this last low here, is expected to be protected. But instead, that wasn't what we had. We had this high and this low, then we had a new high that took out this last high. Then imagine this low now has come to break this low. That means this low now, this low is no longer protected. And you see, this low here now, since it has been taken out, that means it's no longer protected, and that means there is a change of character here, or a market structural shift. Like if some people call it MSS, market structural shift. So they will call it MSS, or they call it choke, change of character, or market structural shift. And that was what we had here. So this low now, this was the last low. You see, this low now has been taken out by this new low. So immediately we had a change of character. I was like, okay, I think we're having. That was why I wait for like a pullback. I wait for it. And for the pullback, you can make use of because you want to know where the pullback will end before you take your sell or your buy. So for the pullback, you can actually make use of the fib retracement tool. This is it. So for the pullback, you want to know where the pullback will get to, or the likely areas it might get to before you can take your sell in this aspect. So you come here, you paste it here, and you draw down. So you paste it like this. You make sure that this low is touching the last low here. You start from the high here, then the low, this last low here, then you bring it down and drop it. So then what you do next is you target from 0.5% and above. Now there are 3 key levels here for the fib retracement. We have the 0.38. This is 0.38, 0.5, 0.618. So the one I make use of, I start from the 0.5 and above. So since we're expecting a sell, I'm starting from the 0.5 and above, and this is where we have the 0.5. And so what I just do, I come to this 2 here. Because I've been able to target from 0.5 and above, because that is 0.5 is like the middle of the fib retracement. Understand? So now this is a sell now. So what I do, I come to this 2 here, click on the horizontal line, then I paste it on the 0.5. And once I'm done with that, I click on the fib retracement tool. So what I'm now, the reason why I'm doing this is, any level above is 0, any zone above is 0.5. I want to sell from there. So if the level doesn't pass, if price does not get to 0.5, I'm not ready to sell unless price get to 0.5 and breaks out ahead. So any level from 0.5 and above, I want to sell. So what I do is, once I use the horizontal line, I place it on the 0.5. I come to my field retracement tool here, then I delete it. So what I'm now looking for is any level from here. I want to sell from 0.5 and above. Can you see? Anything from 0.5 and above, I want to sell from 0.5 and above here. That's it. I want to sell from 0.5 and above. Now, if this price, you can see that what we have here now, when the price retraced, it got to 0. It broke out. You can see it broke out, and then we had the sell. Can you see? So 0.5 is the middle of the field retracement tool. So anything above it, I want to sell. Can see? So it broke out and started coming down. So I took my sell from here. So you can see that the price tanked. Then we had a news suit today. You can see the price tanked, but couldn't break below this. So just ranging a bit, and then it went up. You can see. So actually broke even. I took little profit here. Although the price came down and gave me almost 1:2. Yes, 1:2.5, but I didn't take the profit on time. But when it retraced back and it was giving me a bullish trend already, I really had to close at almost break even. You can see what we're having here. We had this up, down, a pullback, then we're having this new high. Now this new high now has taken this last high, and this is where price is currently. So this was my trade for this week. So let me go to my trading journal. Let me show you what I've posted on my trading journal. So far for the week. So like I said, whatever is not measured cannot be improved on. So the reason why I have my trading journal is to keep a track of how I'm doing on my trade daily, and to see where I'm working, where I'm lagging behind, so that I can work more, and to also see where I'm making results too, so that I can keep making results. So I have the trading journal for May, June, July, August. Then we are currently in September. So for the trade I took in the trade. So I have now updated it. So it was even so I broke even. I broke even. Then, although the market already gave me 1:2.5, imagine. But I broke even, and the reason was that I took some little losses before, and the little profit I now made both of them are to cross each other. So, alright, so now this is what we actually have here. So like I said, from on the 8th, and see USD, I took a loss. My risk to reward was so high here. Normally, for my risk management, okay, let me explain what I have here. I have the dates, the pairs, the results, the risk to reward, and the risk management. So for on the 8th, my loss, I'm supposed, if I were to follow my risk management, I'm not supposed to have more than one. You can say I'm having three hours. I'm not supposed to have more than 1 hour, but I had 3, so that means I didn't follow my risk management here. That's why you're having no here. Then on the 9th, so I took a loss. It's supposed to be 1, but I'm having 2. I didn't follow my risk management. Then on the 10th, so it was another loss, and this was 1.5. I didn't follow my risk management. Then on the 11th, I had a profit. 2 hours. I didn't also follow my, but I had profit here. Then this was yesterday. I broke even. So currently now, plus or minus the risk to rate reward, we are having to plus 3 hours. We are still in profit. So we are still in profit. So this is my trading journal. I'm going to be holding another class where I will explain to you. This is my trading journal. So I'm going to explain to you how to come up with a trading journal and to be consistent with it. So now, from this trading journal now, it's really telling me that most of my, imagine all these losses here, I'm having 3 to 1.5. So it's actually my fault, because normally, whenever I take a loss, I should either have, I'm supposed to have just 1 half. But you can see I'm having 2. Imagine even this one, I had 3 half. And if I'm taking profits, I should either have 2 or 3. So that I've not really been following my risk management. I'm making this thing transparent so that you can see the way it is. Because as a forex trader, you have to be transparent with your mentees, and you have to be transparent too, and let people know that this is the way it is. So this was my trade for the week. So I believe that we have actually learned something today. And if you have any question, I want you to drop it in the comment section. And I also want you to follow our Telegram channel. I'm going to be dropping the link. So here we come together to analyze our trade together. For the Telegram channel, we come together to analyze our trade together. You understand? And now for this new week, this is on the 4-hour time frame. Excuse me. So this for the 4-hour time frame. So for this new week, I really don't, well, let me see if, let's do a little analysis of what we are expecting this new week. And like I said, the fact that you have a bias does not mean you should be rigid with your bias. Like the trade I took on Friday, I took a buy at first, but later on, I closed the buy and took a sell, and it went my way. You understand? So I had my own bias, but price was giving me something else. And like I always say, always follow the direction of the price. Be reactive, don't be proactive. Don't go ahead of the price. Allow price to break out. Allow price to play out. You understand? So now this is on the 4-hour time frame. You can see. Now, price has broken out of this level. Let me remove this so that it can be clear. So you see, this is on 4. So price has broken out, came back, was a deep pullback. Can you see? Price broke out. Can you see? Was a deep pullback. Then came back to retest this level. Can you see? This level here, or this zone, like you call it. Then it gave us a bearish trend. Now this low now has taken out this last low. This low has taken out this last low. Then we had a push up that took out this last high again. Can you see? You can see. Then we had a pullback. But this pullback now stopped here. It didn't get here. This one stopped here. And this was where the market closed. Now this market closed here, but it hasn't taken out this high. Can you see? But this was where it closed. So it didn't take out this high here, but it's a closed take. So currently now, this is what we're having on the charts. On Eurusd, this is what we're having currently. So my bias now for this new week is that currently now this is the last low. This is the last low. And this is where the high is. This is where we have the last high, can you see? And this is the last low. So what I'm looking out for is, once price breaks out this last high here, once price breaks out this last high, okay, this is the current, this is the last high here, this high here. So this is this last high here, nice. So once we have a break, once price breaks out this last high, because this was where the market is currently. So once we are having a break of this last high, once price breaks out this last high, I'll be expecting a pullback. Then I'll look for confirmation to continue to buy. But if that is not the case, if by Monday we are having a pullback that breaks out this last low, then I'll wait for a retracement for 50% and above, so I can look for a selling opportunity. So that is my bias for the new week. But our fingers are crossed so that we'll see what price we do. So that's going to be my bias for the new week. Alright, so I hope you have learned something today, and then I want us to drop in the comment section if you have any question. And also, like I said earlier, you can join our Telegram group where we share our trade, we encourage each other, we share our profits and losses, and we learn from each other. So you can join our Telegram group. Alright, so this is where we are going to end this class for today, and I'm going to be seeing you in the next class. Until then, bye.